So I'm trying my practice account today because I'm trying to get better at it on the long side. Figured if it came back up over this level, me look like if it came over this level right here, 62.97, it was going to be a good long signal. Which ends up being a good long signal now. Have the high volume bar. This is highest volume bar now, 2135. GAN signal up is 6381. 10 ticks off of that is 6371. If I would have been perfect on entry, I should have been in long at 6281 off of this volume bar right there. I let that one go. First time I was goofing around on the other account, getting ready to reset for Monday. I'm trying to get better at seeing this long signal. I used to be able to see it really good, and I just don't have my bias has been getting in my way. Not allowing the market to do its own thing. That's a that's a 2p move, I believe, from original entry point of 6281. If I would have been short, that was a short signal. To it, not through it. Got to relearn how to trade the long side, I guess. I don't know. Pretty damn good on the short, but the shorts haven't been good for me. Not lately. I mean, it'll turn over and it'll come my way at some point on the short side. Hopefully, I'll be able to see it when that happens. I'm trying to relearn how to stay out of a market that's doesn't want to be traded. We use this less 3 ticks right here. And we'll go 5 ticks off of that right there. 14 will be 9. Looking for 71 to the upside. If I was at 81, 63.49 would be next target. Let me tell you something, 50 ticks is very easy to hit when you're trading 2 contracts. It just doesn't make sense. I'm going to have to stop trying to trade 2 and just got to stop. Got to stop myself from doing that. It's not worth the risk, I guess. Unless, I hate to say it, always. Let's go ahead and lock in another 10 on a Friday. If I can get better seeing the long. Actually, I saw the long at 62.81, but I didn't trust it. I forced the market to get up to that 1p mark and then come back up through it again. And I took it from the 1p looking for a 3p move up through to the GAN signal. We've hit one of them at 6300, it's 45, 90-degree angles at 39, and the 137.5-degree angle is at 81. So I'm 10 ticks off of the 81 at 63.71, which also coincides with a 4p up move, 90 ticks from original entry, which would have been original entry, excuse me. Look at this. So I was playing around in the other one so that I could, well, going to reset, but I was going to reset Monday. You know, sometimes I just suck. The way it is. The market wants to go up. There's not much that stops it. Just like when it wants to go down. Let's just leave it at I suck. I think I've got to get a lot better at my first entry point. The first entry point seems to be throwing me off. That initial trade, the initial trade that I put myself into, seems to screw with me. I know I don't have a lot of patience on a long signal because I know that it can come down really quick, especially after you see a volume bar like this over here. So if we'd mark that, let's mark where, oops, that works. So here's where there was interest right there to drive the market. What I'm going to do is pause this video at this point, and we'll look later in the session what happened for the rest of the day, and we'll talk about it later. But I've reset, and I'll be trading that reset on Monday, 26th, trying to put in some of my thought process into what I'm doing, and trying to change my logic of thinking more in terms that the market can go up until proven that it doesn't want to go up, and get myself involved. I can say that there was a long signal, but it was kind of weird today. This is a long signal supposedly, by the way I look at things, but look, it comes in right here at the top of this market. This ends up being the high, I believe, at the time. And then it sells off. So that's kind of tricky. And you see these bars here. And the red led the way, I believe, at 1330 today. Yeah, here comes the red bar in right at the open of the market. See what happens above 62.93. Goes back to 83. What's it got above it right in this area? I got to get in. I'm seeing shorts right now. That's the thing. I'm seeing the market, and only thing I see is the market heading down, heading down, heading down. And obviously, I'll be right at some point. The market will go back down, but right now it's kicking my ass because I'm not allowing me to trade the other side of the market yet, and I've got to get better at that. Honestly, I know my issue. I can tell you that over and over again what my issue is, but until I actually physically allow myself to take it on, I'm no good. And that's why it's better to be not in a funded account at this point until I can be more of a fluid trader. I believe that I'm at that last stage of where I need to be. I've got very proficient in trading on the short side. Now I've got to relearn how to trade good on the long side. And then I believe I will be a better overall trader to be able to stay in the market and most likely stay in funded the next time I get there. So it's close. It's close. I mean, I've written a lot of notes in my journal here over the last couple of days, and trying to formulate a strategy to keep myself. You know, do I? And it's all the way back to using a 1R profit target. I mean, a 1R stop loss too on. So I'm leaning towards. So you understand. I'm leaning towards holding a 1R stop against a 1P target on a long trade. So I know you know I go with a half to 2/3 on a short side. So that's the bonus of being on a short side, is you don't have to take as much of a hit. But the long, it's hard to find. You know, the fake out entry on the long side is a lot harder to get involved in. But if there was a fake out entry on the long, where was the entry point? It comes down, stops right around here, and then you see that would have, when may or not have brought you in here. Then you see this. I wouldn't have tried to attempt the fake out on this one, because I believe that at the beginning of time, I'm very tough trading a fake out entry between pivot point and R1. I wouldn't mind trading a fake out entry between R1 and R2, but pivot point and R1, I just don't feel that a fake out entry point is going to get the job done overall. So right here would have been a valid entry point, once again, like I said, or above this mark right here, right in this area would have been a good point to get long. This would have been a good spot though, because looking at the levels right through here, we had attempted this level 1, 2, we went down it 1, 2, 3, and that was the fourth time going up and through there. So that seems to be a decent area. And then I saw this later on, 1, 2, 3, 1, 2, 3, 4 going. Really took almost 5 times to get it up. Now you're seeing it here. So average range of movement up is where I usually look at. Average range of movement on a short is 3p. I'm leaning towards average range of movement on the long is 2p. Like today, that would have been 45 ticks up, or it could have been 68 ticks down, 67, excuse me, 67 ticks down, or 45 ticks up. And the market did go up 45 ticks. So the 2p profit target is probably a pretty good bet on most long days. And a 3p profit target on a short is a pretty good bet on short days. So it's close. I feel like I'm right on the verge of having solved my long side problem. It's close. That I can tell you. So let me pause here and let's see what I'm curious what happens inside this ranges here off of this spike bar, because what I've noticed is that a high volume spike bar ends up being a sticking point of the market and a driving point later on. So it'd be interesting to see how the afternoon plays out. I'm gonna pause right here, and then we'll be back towards later in the session to see how it all played. Excuse me, how it all played out. So before we left off, it's amazing to me how many times things happen. This is the high, 63.73, and it pushed off of it. Why was this the stopping point? I have no idea. We went to R1. Took a long time to get to R1. It went up to here, and then it's not been up since that point. It's a Friday, so people it's as high as they want to send the market on the day. But the point is that 71 was hit. 3p target was 49. Run around here. And then the 4p target up there. 71, which also corresponds with 10 ticks less than the Gann number of 63.81. So obviously I need to get into the oh, and by the way, we never went back into that range held. So here was the range that we looked at earlier, and it went back and tested it several different times, but it never went back to it. So it come through here. Here's your 81, 6304, I mean. So here's the original, could have been entry point on the long side down here at 81. Then it meandered around, went up to 1. This is 2. Struggled around the 2p mark. Blue line held the whole time though. So the blue line holds until this point right here. And that could have been an exit, and anything that was trailing would have been right in this area after the blue line gets penetrated by 5 ticks or so. You're looking at a 3p exit, a 63.49, and then you see our 4p target being run right up there. So I found, as far as trading longs go, it's best to take the profits when they're there. Not like on the short side, you can have a lot more. The odds of it going against you are a lot greater in any given day. So this is a frustrating thing for me to see, knowing that I could have caught this whole move if I was just a little bit smarter of a trader and understood how to catch in. So here's your mark in the sand right here. This is the fighting point for the day. It was right here at the 6,300 mark when it did go through there, and it fought quite a long time. The morning session, this showed up right here. That kind of tricked me. So I look back at this bar right here. This is the bar that tricked me on the trading day. A red bar coming up and an up move. It doesn't happen very often. So I looked at that as a mistake, but it's so that buy signal, and then I looked at it that we're done. And a lot of times you can be right on this one, but at some point, if you're going short, you got to say to yourself, where is the market done going, doing what it's doing, done its business? I don't know. You know, trading is such, there's no perfect science to it. You just do the best you can with knowledge that you have at that point, and then you hope that, I mean, it's easy if you can get into a trade. It's easy to monitor, at least for me. If I can get into something, it's easier for me to allow the market to do its thing when look how long it took to get to that high though. So 11 o'clock, that was 3 hours of movement. So from 8 to 3 hours, and to go roughly today, that was to go 4p, 90 ticks from entry point. Could have been entry point at 81 to move up here to 63.71. Took 3 hours. To get to a 4p target on the down might take an hour. So that's the whole point of me having to have a lot more patience on the up. And this is a good day to look back and say, you know, this was a day. And look right here. And this is what I like to do when I see a high volume bar now. I like to mark it out and say, all right, so what I'm saying on this bar is you want to be long above, short below. So that's kind of where I'm starting to lean towards right now. The market would have been able to get underneath this range right in here, then we would have seen the short for the rest of the day probably. Or at least you would have seen a red bar that would fight with this one. I mean, if we look at two bars in particular, if we can see it on the same chart, and I can't, we see this one here at the 807 mark. I guess we can, but got the 807 volume bar right here. And by the way, this is 750 and this is 500 on the bars. So you see this Wyckoff stopping volume right in here. This corresponds with this move right through here. Then you finally see it breaking out. Then you see this bar. This bar signifies the range and the continuation. It wasn't an easy day to trade. Fridays can be easy sometimes. This bar right here is a bar that kind of tricked me though, to be honest. That was the bar that made me, I thought, it's red. Why do we have a red bar in this up move up here at the top of this range? Why was that a point? Why did that happen? So, and then you see the downward movement off of that. Then you see the crossovers of the 200 bar. That's why this is such a good area to be long from. Even if you would have been long at this area, got stopped out, it would have been good to get in again based upon the volume that you saw. And you would have been long into this area right here when this bar showed up. You'd have been able to hold this move based upon what you see here. And ideally, it could have hit your 4P target during the day. So there was about, I guess you could say if you got in at the 81 mark, there was 90 ticks available. And if you didn't, if you got in at the 63, 62.99, 63.04 mark, there were, there was 70 plus ticks available on the up. So there is still potential to trade. If the market is going to move, it's still going to be a strong move. There's still potential. There's still a chance to get into a trade at some point. So but right here, this bar versus this right there, that set the day off. That set the day up right there. So entry point right up, and this is your 1P target being hit, and it going through it, it fought right through there. So at this point, once it cleared, and it becomes what I call a failure bar at some point. So I don't know where you would look at that bar right here as a failure bar at some point, but this bar, when it continues to move up and can't come back down, it becomes a failure bar. So it's a lot harder to see sometimes. It's much easier to see a failure bar on the short side than it is on the long side. But you can see that it held right in this area. I mean, and even if you had caught it from here going up, there were still about 45 ticks available in the trade once it made up its mind that it was not weak. It had some strength to the long side. So obviously hindsight, like I said, is 20/20 there, and this is the movement after the fact for me. I don't really worry about this stuff. It was the morning session right up through here that So the point is this: how do I get myself, if this was the bar that came in off of the, here's the 8 to 805 area, here's the first bar that's up over 750, making a temporary top, and it doesn't crest it until over here. So today, the control point, what they fought was a 6,300 level. This right here ends up being your signal, right in this mark, using this area through here. So let me show. So you have this area right here on the charts. You see this move right here. You see this. Next time down, you see that. Right there. There's your entry point right in here. That's what I need to be able to see. If I would have been able, and I saw it earlier, I did see this mark in the sand. This is where I would be long from. So if nothing else, what I can tell you about the strategy is it's there. I mean, it's not like I don't see it. I definitely see it. So I saw that line in the sand for the upside. So that's the good thing. So I'll give myself a star for being able to see and recognize a point that can be long. And I see this an awful lot. So I do see the longs. And what I've got to get to the point of being able to see is if then statement. So the if then statement is this: if this point here and then maybe I need to start paying more attention to what Williams is telling me. Then all of a sudden, looking at Williams at this point, I can change my bias from going to then. So I'm short. If short, then divergence happens. Just call it D for now. Reverse. Too long. So, and there's your signal right here. And that right there is the key to the trading day. And then you had confirmation on this long signal, which I talked about this before. These bars like this are one of two things. A bar like this was his highest volume bar, but it either does one of two things. This bar either becomes the close to the top, so it's or it becomes what I would call a failure bar. The failure would be a continuation of the trend long on off the blue, and if it's a top, then usually would see maybe this area right here would have been the area that would have driven the market down, or right through here and the market would have driven down. So when you're trading, and I've got to get to myself to the point, when you're trading between R1 and pivot, at some point, you know, the fake outs, I've got to be able to be careful about fake outs, which I look at the fake outs. So here's a fake out, and here I would look at it. Here's a fake out here, but this volume bar, so right in that area, right in here is your signal, right in front of this, to get to, this is a 1P signal, right? And then it runs through the 1P mark. That ends up becoming, you know, your break-even area, which would have been fairly easy to contain if you're long coming into this. And then you would see this. That gives you a natural resistance area, support area, to hold the market. And if it goes through that, then it's going to be, then if it goes through like this and then it comes on down, then that works in the, pretty much, if that would be, this would be, what I'm trying to say is this would have been the top right in this area. This could have been the top and none of this other stuff would have happened. That could have been what drove the market down. That could have been the control bar that sends everything. And it will. The bar like this occasionally will be a really nice shorting bar. But what I've recognized and started to see more than not, if it in a strong up move, the move is strong, this becomes more a stop running. They're running, they go and test the market up there to see what's up there. And so they go up here and test it, they see what's up there, and it's like, oh, nothing they need to worry with, and they just drive the market on up after that. So being able to understand what people are trying to accomplish in a trading day, with all the algorithmic trading and all the other stuff that's going on, there's still an overall riding trend to the market today, even though it decided to come back and forth, back and forth, back and forth down. There was still an overriding market. The market moved basically from above pivot to the R1 today, cresting up here, making a high roughly at the 11 o'clock mark on the CST. So ideally there was about 90 ticks or so available on the trading session. I would have come out at 71 on the long, because I like, if I'm going to do the GAN signal, then I'm going to use the 81 less 10 ticks every time, or whatever this would print out for me. Now, whatever I would say the open is. So if the open was 6,200, that's going to change numbers around all through. I think that's what drives it. Yeah. So 6260. Yeah. So all that changes the GAN's numbers about what the market says is the open. So I mean, this is not perfect science. Nothing is. It just gives you a point in the sand that you can say, well, this is where the market could find some form of resistance to the upside, or not. But it gives you an ability to be able to look at a target. It's what I believe GAN is best used for. That and the fourth time through, trying to find an area of a good trade to get yourself involved into a trade on the fourth time through. As you've seen, a lot of my videos talk about that, the fourth time through. But you can see that this area right here, this is the key to the trading day right here. Here's your key. Your key to the trading day comes in right here. So this could have been the deciding factor. Short below, long above. That's how I need to start thinking about the trading days and sessions. So if I would have missed that move altogether, and then this would have been in here, where would I have found value? First of all, if I would look back and see where I would have been long from. So that's where that 81 would come in from. I would say I want to be long around that 81 mark. And then I see that, okay, we moved a 1p move. Where do I want to get long? I'm probably looking right in this area right through here before we move to 2p. If I'd have missed this move right in here. But if you watch this video, you see that I got long because of why? Because of all the times that we were hitting up against that 6,200, almost 60. This is the 6,300 mark, right? So sometimes it just makes sense that there's a key level and you want to be in front of it. So here's your, you look at 1, 2, 3, fourth time through, right? So it's easy in hindsight to look at something and say, oh, that's what I would have done. The harder part is to see it and then trade it. So what I saw when you go back and look at this video, the very beginning of this is, my short bias was in control up until this point right through here. This is where I threw the towel in and said, you know what, the long is definitely a lot stronger if it wants to get above that 62.99, 63, 6,300 level. So that's basically, and you could have even been in this area right here and been able to hold on and made it through here, corresponding. This is a different mark in the sand, but the very first mark is what I showed before. So there's more work to be done to figure out me and my confidence level to the long side, but you can see you can see that there's some good things coming from me really sitting back and thinking about how I want to trade those black days. Black days meaning long days. The red days, man, I'm gonna crush it. I'm gonna crush those days when they happen more times than not. But I need to be able to pick up these black days, because honestly, there have been a lot more black days than red days overall since I started back looking at trading in October of last year. So I've got to get better at seeing them. That is really all I want to talk about today. I want to stop this recording, get this thing moving, get it up so that I can be able to review it as well. All right, that's about it. God bless. See you on the next video put together. Bye for now.